for determining the depreciation. During the year, if any new asset is acquired or any old asset is replaced or sold out. So any changes, additions as well as extensions in the value of asset occurred, that is also one of the base for depreciation. These all points are also to be considered while calculating depreciation. The next is obsolescence is another factor to be considered. What amount of or what proportion of what value of the asset is obsoleted due to technological changes, and that will also reduce the value of the asset, and this is one of the base of calculating depreciation. The next is scrap or residual value. It is very important in Companies Act 2013. The Companies Act has given much more emphasis on residual value and how to calculate the scrap or residual value. It is the reduction in the value of asset over useful life of the asset. The another point is the provision of Companies Act. Earlier, Companies Act 1956, recent one, the Companies Act 2013, as well as the income tax law are equally important for calculating depreciation. So these are also to be kept in mind. What are the provisions of Companies Act and income tax? In next slide, I have covered that what are the Companies Act 2013 provisions regarding depreciation. So this is also to be kept in mind by the auditor while valuing or while correcting the depreciation or while comparing the value to be shown in balance sheet as compared to the earlier years. The working hours equally important. The assets working hours are also important. It is a base for calculating depreciation. How many years as well as in a 24 hours a day. In a day, how many hours the asset is used. Whether the asset is used for a single shift or a double shift or for a triple shift. So these are also to be kept in mind, and on that basis the depre is calculated. The next is the skill of the operators handling it. How the asset is handled. Whether the skilled laborers are there. The laborers' efficiency regarding handling of the asset is equally important. The next is a major overhaul which enhance effective life of the asset. Asset is acquired and how it is utilized. Any major repairing, major overhaul is required, is done in the value of asset, is also to be seen, also to be considered, and it is a base for depreciation. The next is a provisions of Companies Act 2013 regarding depreciation. I have covered these provisions of Companies Act 2013 because mainly the Companies Act elaborate and gives these many provisions. Because the Partnership Firm Act 1932, which is somewhat silent on the part of provisions regarding depreciation. Mainly the partnership firms, other sole proprietors, they use taxation rates while calculating depreciation. The corporates, they use Companies Act 2013 provisions as well as income tax provisions. So in case of joint stock companies, the question arises to compare both the figures of depreciation. So what are the provisions of Companies Act 2013 regarding depreciation? Depreciation is calculated on permanent assets. The assets which are acquired for a longer time period for the continuous business cycle and which are not for the sale. They are permanent assets and on which only the depreciation is calculated. The next provision is, it is given in the section 123 of the Companies Act 2013 in Schedule 2, which highlights the useful life and not the rates. As per Companies Act 2013, now the concentration or the emphasis to be given on useful life. More detailed assets list are given in Companies Act 2013. Whether it is RCC frame building, carpeted or RCC roads, non-carpeted, industry-wise plant and machinery list, which machinery is there and which useful life of the asset is to be done, is to be used to be calculated. The next provision is 100% depreciation for assets less than 5,000 rupees. If any asset cost 5,000 or less than that, then 100% depreciation is calculated and to be shown in P&L account. The provision also provides the concept of componentization of the asset. The significant assets which are of a same category, they are to be grouped, they are to be clubbed, and the group of assets are to be depreciated. So it emphasizes on the componentization of the asset. So here on the part of auditor, it also comes that whether the company is depreciating on the assets on an individual basis or on a group basis. Further, the provision lays down that the residual value not to be more than 5% of the original cost unless supported by technical advice. The residual value must be 5% of the cost price of the asset. Before declaring dividend, the provisions for depreciation should be made. Depreciation on wasting assets as per Accounting Standard number 26. Assets used for double shift, the depreciation on such asset are 1.5 times, or in other words, it increases by 50%. The assets which are used for triple shift, they are to be twice or doubled. 2 times, or in other words, they are to be increased by 100%. Further, determining continuous process plant. Design the assets which are operated and designed for 24 hours in a day. Such asset which is under CPP, continuous process plant, and to be depreciated separately. Accounting Standard 6, depreciation accounting, is also to be kept in mind while calculating depreciation. The provisions of Accounting Standard 6 are also to be kept in mind. Accounting Standard 6 mentions that whatever rates mentioned in the Act, they are minimum. So the company can also go one level ahead while calculating depreciation. So now from the next slide, I have given one of the example of Companies Act 2013, that how the useful life of the asset is to be kept in mind. If the management uses the life of the asset 10 years, and as per Schedule 2 of the Companies Act 2013, the life of the asset is 12, then as per Accounting Standard 6, the company use 10 years life only. The company cannot go for 12 years. Schedule 2 requires disclosure of the justification for using lower life of the asset. The company cannot use the 12 years, and the justification for the 10 years should be given. Case 2, or another example, if the company management uses 12 years life, and as per the schedule, the life of the asset is 10 years. The company has an option to choose either 10 years or 12 years. And the disclosure should be given why the company uses longer life of the asset. This example is for residual value. If the management is not going for residual value, so residual value is nil, is 0, and as per Schedule 2, the residual value cost 5%. At that time, the company cannot go for residual value. And in another example, if the management uses 10% the residual value, and as per Schedule 2, minimum 5%, then the company can either use 5% or 10% and disclose the justification regarding using of the higher residual value. Now, after looking at the provisions of Companies Act regarding depreciation, what the auditor has to see, whether company or whether a firm or any other institute, regarding depreciation. The auditor should verify the customs and tradition of business for charging depreciation. It is very important that what are the customs and tradition of a business or a company through number of years regarding calculation of the depreciation. He should also verify the useful life, the rates at which the depreciation is allowable under Companies Act and Income Tax Act. The auditor has to see that what is the useful life that company has adopted and what is the life laid down in the provision of Schedule 2 of the Companies Act 2013 are also to be seen. He has to examine the date on which the asset is acquired, the plant register, even the article of association, and the adequacy of depreciation. Which method of depreciation is used, that is also to be seen by the auditor. Any changes has been made in the value of the asset or any changes has been made in the method of depreciation from straight line to WDV, from WDV to straight line, also to be seen, verified by the auditor. And the company must have followed consistency while following the method of depreciation. To see that Accounting Standard 6 has been complied for calculating depreciation. Regarding before declaring dividend and managerial remuneration, the company must have provided amount for depreciation. The judge's technical advices in case of calculating depreciation, in case of useful life, they are also to be seen by the auditor. Whenever necessary, he should also verify or inspect the asset personally. Mostly this is the duty of internal auditor, but if it is not properly done or in absence of this, the statutory auditor can also verify the asset personally. And he has also to see that whether the depreciation and assets are properly presented in balance sheet or not. If the assets are acquired during the year, then depreciation to be calculated on pro rata basis.